Oh, I mean my conviction, it's like happens to all of us, just keeps growing. And it's not really just a function of price. It's a function of the amount of people that come into the space, the thoughts that's going on, the development going on. So yeah, I'm still both irresponsibly long financially. I've not sold a single thing. And irresponsibly long in terms of commitment to where this is all going. Real Vision CEO and founder Raoul Pal originally coined the phrase irresponsibly long, which was a reference to his portfolio allocation and his 100 conviction in the crypto space. Since going all in on Bitcoin and then Ethereum back in 2020, Raoul's conviction has only grown, with him explaining why Metcalfe's law and the deflationary pressures of innovation are only going to fuel crypto adoption and cycles into the future. In an interview with Scott Melker, also known as the Wolf of Wall Street, Raoul breaks down why exponential assets will always outperform and why he's so certain in the crypto space. Make sure to stick around to the end of the video where Raoul explains why Cathie Wood has the innovation thesis exactly correct and how it all plays into the crypto narrative. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can change your mind. So I spent a long time thinking about what is going on and seeing the markets go up so fast in the middle of still what the largest recession of our lifetimes and basically of the last 100 years. And I realized that if you divided the S&P or any of these by the Fed balance sheet, they'd gone nowhere. So they were just offsetting the debasement. So I started looking through all markets thinking, okay, what's offsetting and what's not? And what's interesting is the S&P was basically just about offsetting it. Gold was doing okay, but not great. Real estate was about the same. They were all kind of trading in a range with each other, which showed you this denominator effect that I'm talking about was happening. Who thinks the Nasdaq and crypto? Forget crypto, the Nasdaq. Why? And the classic Twitter refrain is, old man shouting at the internet, it's a bubble. But when you look at it, this technology that is going on is facing network effects, Metcalfe's law. These are not like bringing out a new product, a better mouse or whatever, right? These are things, new things that create adoption effects, network effects, Metcalfe's law. Don't price in P/E ratio terms. That's why nobody owned Amazon all the way up. Particularly cynical people, macro people, gold bugs. It's like, I can't own this. It's, am I tested? And why Tesla at its valuation was still rising, correct? And nobody got it, and they still don't get it. But those TNG stocks have outperformed, and we all got it wrong. To be honest, we all got it wrong. And because we didn't understand that the more we got into crypto, the more we started to understand network effects and realizing that it applies. Okay, so what is coming down the pike is something so extraordinary that I've just changed my entire macro framework based on it. Into this, 5G is being rolled out around the world, so everybody has access to super data now. Anywhere that doesn't have 5G is getting Starlink, and the other ones, Elon Musk, Starlink, right? So basically, you're about to connect the entire planet with free data in the next 5 years. Everybody, you're then going to give them the whole crypto world of digital banking, digital money, stores of value, all of that. You're going to then be able to distribute computing power across massive networks, distributed computing, like we did with cloud, that increases the computing power for science. And it goes on and on and on. We've got autonomous driving, autonomous cars. That's coming in the next 5 years. I think somebody between Tesla or Google is going to get that across the line. Sure, it'll be for Amazon delivery vehicles first or whatever. So we've got a ton of these technologies. I've only listed some of them that are all coming out in the next 5 years. None of these are ideas now. They're all products. They're all happening. The Internet of Things, all of this is happening. So we're going to go probably through the largest change in human history of technology in the shortest period of time. And everything has network effects. None of these are new products. These are new ways of how we create productivity. We've also got the metaverse, the digital world. I think the metaverse itself can double the size of global GDP because it's like discovering the Americas again. It's a whole new world where you can earn money, own real estate, to invest in, create businesses, live essentially. Okay, so you've doubled the size of the world. People don't get their heads around the size of what is happening, and crypto is part of that picture. And it's all happening right now, so I've now thought that the advantage the millennials have is they understand this. They're not cynical macro people who think the world is mean reverting. They kind of understand adoption effects, and if they can invest around it. This is why I wrote that tweet about Cathie Wood. People understand she's got every one of these things. So she's got every one of these themes, and the old men railing at the internet are going, it's a bubble. There are liquid stocks. I don't care. Cryptos are liquid. What you've got here is she's chosen pretty much every right thing that is going to be truly transformational, not in 20 years, not in 10 years, now for the next 5 years. So the probability of her hitting smoke, sure, some of these won't work. But her hitting a home run here is enormous, and nobody can see it because everybody's too cynical because they believe in a mean reverting world. And we don't live in a mean reverting world any longer. Love that. So the easiest way to check to head check, is this a network adoption style story or not? It's just simply log to a log chart. So as we do in crypto, right, we're so used to it, but we don't think of it in stock market terms because we're used to mean reverting. But if you just put a chart on Amazon on a log chart or Facebook, they're perfect. They're just perfect network adoption models. They're exactly the same as Bitcoin, exactly the same as Ethereum. They're all the same thing, which is they're trying. As soon as they understand that Bitcoin is a very, very long duration asset, it perfectly suits protecting the wealth of nations. That's all the sovereign wealth funds are, right? Usually, it's an oil or commodity producing country that gets windfalls in boom times and has hard times. And they offset it by drawing down on this pool, right? It's a savings pool. Now that savings pool needs to grow over time. A lot of it's denominating US dollars because everything's in dollars. So they're trying to diversify it, but to have assets that offset global inflation or global debasement of currency, etc., it's a perfect asset. But it's so skewed to the upside that they can have a 3% allocation, they can lose half of it, and it makes no difference. If you get it right, it really does make a difference to the portfolio. So I think it's very well suited. The problem is, as I've argued all along, they can't really come in until it goes up more in market cap, right? Just not big enough yet because these guys are, no way, I don't know, it's $1 trillion. These guys are huge, huge, huge. And they're not like BlackRock, which is, a few $1 trillion, but they've got millions of different funds. These guys are basically one gigantic asset allocation. It's, a ticket for them, They even allocate hedge fund ticket sizes of like $1 billion or, $500 million. So let alone doing something like this. So they need to put 10, 20, $30 billion at work just to have a minor allocation. If you take the printing of the balance sheets by the G4 central banks and you annualize it, it's growing about 15% a year, which is that denominator falling by 15% a year. So you do buy bonds. Now let's say you are Microsoft. Okay, you've got this gigantic corporate treasury, several $100 billion in it, and you've got a bunch of credits and a bunch of, normal stuff. Now, all of that is underperforming the Fed balance sheet. Now, does it really matter? Because wages are also underperforming, everything else underperforms, because people like Microsoft do two things. Also buy companies and buy real estate. Both of those are priced in Fed balance sheet terms. They keep going up because they're fixed assets. So they haven't got their heads around this. Yeah, I think people haven't really explained it to them that sure, your cash flow and the corporate credit that you earn will carry on for your needs, for salaries or whatever else it is, general organic growth. But if you want to buy things, they're more expensive. Been talking about people fear change. We live in a world of the politics of nostalgia, where we look back on the 1950s. The baby boomers do and thinking life was so simple. That world was never a good world either, but we have the politics of nostalgia because we fear change, and we're in an accelerating period of change right now. It's hard for people to understand. Like you said, you can't understand the life that your daughter is going to be living in 30 years' time. You have literally no comprehension of what that might be. So, that's hard for all of us to get our heads around because we think it's wrong. I never forget when I first went to my oldest friend's house. I've known him since I was 6. I went around to his house, and his son was like 14, and he was in a gaming chair gaming. I'm like, what is going on here? Is that, well, he's been out playing football with his mates and stuff, but he's now socializing. I'm like, what were you talking about? Because we used to go to the shopping mall and meet our friends and figure out what's going on that evening, who's having a party. They'd do it all online. He goes, he's got his friend in the US, he was based in the UK. He's got his friend in the US, a friend in Spain, a bunch of his neighbors, all hanging out in Minecraft, whichever game he was playing, Fortnite, chatting. And I'm like, Okay, the world has so much changed that and that's okay. I don't have to say that's wrong, it's terrible. It's how it changes.